testifying in front of the Senate Banking Committee, Federal Reserve Chair Jerome Powell saying his agency is, quote, strongly committed to bringing down inflation. However, a soft landing for the economy will be tough. Here's Powell addressing how the central bank is tracking the volatility of the crypto market.
Really, there's a need for a better regulatory framework that treats, the same activity should have the same regulation no matter where it appears, and that isn't the case right now because a lot of the digital finance products are in some ways quite similar to products that had existed in the banking system or the capital markets, but they're not regulated the same way. So we need to do that.
Powell adding the Fed is not seeing significant macroeconomic implications from the crypto market crash so far. All right, joining us now to discuss is CoinDesk Markets Managing Editor Brad Keoun from Austin. Hey there, Brad. Always a pleasure to have you. So, your thoughts on Powell's testimony today to kick us off?
Well, in some sense, it's just a continuation of the Fed's efforts to manage the markets kind of on a daily basis, just talking with our lead economics correspondent, Lead Braun, about this. And this is the way that they do it. They just go out and say words every day and markets react. And so in some ways, it actually gives them quite a bit more control than they had in the past, where they would actually have to wait for those rate increases to take place. So Powell basically before Congress saying, we are watching the economy closely, and the market reads that as a signal as, okay, the Fed's just a little bit more worried about maybe a recession today than they were yesterday. And so we actually have seen a little bit of a reaction in the market, the bond market today, and people seeing the Fed just being a little bit more dovish than they were seeing, yesterday, which is actually still quite a bit more hawkish than they were seeing a week ago. So anyway, stocks are up on this news, and Bitcoin's just kind of holding its own.
Well, Powell was saying that central bank officials anticipate that ongoing rate increases will be appropriate. Any concern that the U.S. economy is at risk of tipping into a recession? Seems like he said that was possible.
It's not only possible, it is, it's going to be really hard to avoid. That is expressly what they're doing here, is they are raising the prevailing level of interest rates in the economy, lending rates. This passes through to mortgage rates, it passes through to credit card balances, it passes through to, car loans. And what they're basically trying to do is get people to stop taking out loans to buy more stuff or invest more stuff. And so that is expressly designed to bring down the level of economic output. And I was just reading in a piece yesterday in the Wall Street Journal, and it was like the last 12 rate hiking cycles, 9 of them resulted in a recession. So, yeah, the idea of a soft landing, it's a nice talking point. It would be nice if they could do it, but it's very difficult to avoid when they start really jacking up rates, especially if inflation is so high.
So what do you think will be the impact on Bitcoin? And it was interesting that he noted that the crypto collapse that we've seen over the past couple of weeks isn't going to impact macroeconomic factors.
It's an interesting comment. I don't think he really knows. We've never been at this point in time where the Fed's in a rate hiking cycle, and Bitcoin was kind of this front and center in the global markets conversation. I think Bitcoin is kind of, from their perspective, it's another thing. It's kind of off to the side, and they wish they could ignore it, but they're not really sure what to make of it. And maybe, again, there's lots of mainstream financial press that are now putting whatever happens in Bitcoin every given day at the top of their newspapers and the top of their websites. So, maybe at the margin, it does affect confidence a little bit. If just a normal person sees Bitcoin crashing, maybe they think that's bad for the economy, and maybe that hits confidence. But, generally speaking, look, Bitcoin's still, it's now, after this price crash, it's under $1 trillion of market cap. So compared to, even gold is like 10 trillion or like bonds, whatever, hundreds of trillions of dollars of assets. Bitcoin's a drop in the bucket.
In terms of Bitcoin and inflows and outflows, any interesting trends that you're spotting? And do you see this support line at 20,000 lasting for, another couple of days in the short term?
Who knows what tomorrow brings? I think that is kind of the conversation, is that we have seen buyers come in. I was just reading a note from CoinDesk. The all-time high from 2017 was around $19,800, and we did fall below that last week. It was the first time since we had gotten above that, and so that is probably dampening sentiment a little bit. But we got a quick bounce back up to 21,600 yesterday, and here we are at 22. So we're kind of holding these levels. People are saying if we go up from here, we might see 28, maybe 30. If we go down from here, we may see the low teens, maybe even 12.
Also, what's looking shaky are those crypto exchange / brokers like Voyager Digital is now saying that they had a lot of exposure in Three Arrows Capital. Coinbase has competition ramping up from Binance. How do you think that'll impact the crypto markets?
Well, one thing, it does tie back to Federal Reserve Chair Jerome Powell, because he does not, I don't think in any really incarnation of anything does he stand behind the crypto industry like they absolutely stand behind the banking industry. In 2008, they pumped $1 trillion in secret into the world's biggest banks to keep them from collapsing. And so here we are, we have this chain of institution failures. We have, Celsius, Three Arrows Capital, and now Voyager's in the spotlight, or I should say in the hot seat. And, they had this announcement today that they're looking pretty rough on getting some money back from one of their borrowers. And, if that reduces confidence in the firm and people start taking money out of them and they run out of cash, there's nobody else to stand behind them. So that's it.
Right.
So that cannot be good for confidence.
Well, just one more thing I want to know is that Powell was saying that the Fed is evaluating the SEC's position on digital assets custody. The SEC's directive that customers' digital assets may need to be treated as being on an exchange's balance sheet has many banking regulators scratching their heads about just how it'll work.